Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 22nd, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market, we're bifurcated. We're in a long-term correction as we're under the 200-day moving average, but in a short and arguably a medium-term uptrend as the five major indexes that we track have gotten above their 21 firmly and also above the 50-day moving average. Check over here at the trend gauge. You can see leaders still neutral. We're not going to bullish on leaders, and we're looking to see leaders got hit hard today, and we don't want to see any more of that early next week. Next week is going to be full of uncertainty though, with the Fed on Wednesday and with GDP coming out on Fed on Wednesday, GDP on Thursday. Right now, the Atlanta Fed now GDP forecast is for a minus 2.1% for the second quarter. So we'll see what that number is, and we'll see what the reaction to that number is. But this will be Thursday morning while the market is still trying to react to whatever decision Powell makes at the press conference on Wednesday. And so lots of data next week, also lots of earnings from big tech. So not looking to place any big money on either side of the market next week. We'll talk about that as we get into it. So leaders neutral, arrow pointing toward bullish if we get some cooperation next week. Short-term 21-day exponential moving average, we're bullish. We're above there on all five of the major indexes. Plenty of worthy stocks for the 21 over 21 list also, so good stuff there. Medium term, 3 to 4 closes above the 50-day moving average, but today was a harsh pullback. Harsh from the standpoint of what happened intraday, not harsh from the standpoint of damage to the charts. So we're still sticking with neutral there because we haven't curved up on the slope of the line to the 50-day moving average across the indexes, and that's what we want to get to, full bullish on our medium-term indicator here. Long-term, we're still firmly under the 200-day moving average, and as you know, we talk about it constantly. This is when risk is highest in the market. This is when those 20% pullbacks can turn into 30 or 40% pullbacks. Now we bounced about 8%, 7 to 8% on the S&P off the low before today's pullback, bounced over 10% on the NASDAQ 100 before today's pullback, but volatility like that and this V-shaped recovery, which I'm going to call the straight up from the bottom check mark, was something that you'll see on the tail of the tape here momentarily, something we're keeping an eye on. We were certainly due for a pullback after this straight up move. That's why we've refrained from getting extremely heavy over the last couple of days. So what happened today? Normal pullback in the context of what has happened recently on the indexes, but leaders hit hard. Now, leaders move more than the indexes, I know, but you don't like looking at your quote sheet and seeing down lots of down 4%, 5%, 6%, 7%, 8%. That's a lot. Usually, most of today's those big losses were about the entire ATR of a lot of these stocks, which means a couple things. One, you got to prepare for it because that's the pond that you're fishing in. Growth stocks are volatile. And number two, how did this pullback relate to the recent move up? And that's why we do so much charting over here, trying to determine the leaders from the laggards. So normal pullback, but leaders hit hard. G6 growth lagged right from the get-go today after really leading over the last 3 days, so it really wasn't a surprise to see the shift occur from money out of growth into value, and that happened across sectors and across all market caps too. So G6 down 2.4%. S&P was down as much as 1.6%, trimmed it into the close down 0.9%. NASDAQ 100 was down over 2%, well over 2%, trimmed it to minus 1.75. Dow down 0.4, mid caps down 0.9, Russell 2000 down 1.6. Global diversified 60/40 stock and bond index down 0.21%. In-house, our flagship growth protection portfolio down approximately 0.75%. Still maintaining that 1,000 basis point or 10 percentage point lead over the S&P 500 year to date. So let's get into the tail of the tape and then the updated 21 over 21 list. But first, let's get into the team here at Revere. Trend following is what we do. We don't look at it derisively the way the pie chart buy and hold folks do. We apply a common sense approach to what's going on in the market, same way you apply a common sense approach to everything going on in your life. When something's going bad, you don't ignore it, you take action. Well, if it's we know the signs of an unhealthy market versus a healthy market. When the market's acting well, we participate. Market's consolidating, we pull back a little bit. Market's in a downtrend, we get the heck out of the way. And if you've been following us this year, you've seen us employ our strategy throughout all different types of markets. It's been on the long term, it's been a bear market for most of this year. There have been fits and starts, and we've discussed every move that we make in these videos because we're completely transparent. If you like this approach, give us a shout. Email the head honcho here, Dan@revereasset.com. If you want to get the ball rolling, you can email me too. This is Don over here at revereasset.com, or Tim, Hunter, or Mural at revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. So let's get into it. Here's the tail of the tape. Here's the indexes. Here's the S&P 500. Let's turn off stochastics to make the charts look bigger and better and blow them up here a little bit. So here's the S&P 500 on a daily. You can see this. This was the last shakeout. We really looked like we were going to break down here. But this 3750 area, we undercut it and we held it. And then we started a rally back above the 21. Looked like we were going to have two closes at 21. We had a hard reversal here on the 18th. This was Tuesday. After some bad news came out with Apple said we're cutting spending, cutting hiring. But the market corrected itself and had a nice bounce back. Sorry, this was Monday. On Tuesday, Wednesday, and Thursday, getting a little bit extended here, 8% straight up in 6 sessions. So time for a pause. We got to this 4,000 area, didn't quite fill this gap from this gap down on 6.9. We've been talking about this, got as high as 40.12 before we had a hard reversal. Let's take a look at a 5-minute chart on here. No real news that was the catalyst for the reversal. I think we just got extended too far to the upside. So up to 40.12, came down to 39.84. No big deal. We'll take another run at it. Got to 4,003 and then just rolled over. You can see pretty protracted selling here around 11:20. We broke the low of the morning, went sideways a little bit, another leg down, but then we bottomed here around this 39.39 area, which if you draw this line here, kind of coincides with some support over the last couple of days. Rallied up, little pullback into the close, but we closed strong above 39.60. It's back up a little bit here to a 15-minute chart. Draw a couple of vertical lines here, and you can see from this 14th bottom up with a big drop, up. It's just time for a pullback. Not a big deal in the scheme of things. If you want to talk about Fibonacci on here from this low to the high, the first fib level, 23.6, is 39.43. That's about a little more than where we pulled back today before we bounced. If we want to get down to 39, the 38.2, very common fib level, that's down at 39.01, and that corresponds with a big support level near 3,900. So there'll be a lot of support down there should we move down to there. So that's definitely something we're keeping an eye on. Let's go to the NASDAQ 100. And note also, this is the fourth close above the 50-day moving average. 50-day moving average still flat around this 39.19 area. Another thing to keep your eye on. We want to see that curl up, and then next week we'd love to see the 21 come up through the 50. But again, next week loaded with landmines with all of the data that's coming out between the Fed and GDP. Move on to the NASDAQ 100. Same situation here. This was over a 10% move up off the bottom. 2% pullback in context really does not look like anything to be concerned about. Let's go out to a 60-minute chart here. And you can see normal pullback. If you on a 60-minute chart here, let's get this a little bit further out. So this is the area over here where we had the pre-breakdown before the prior CPI report. So this was a big level, 303 to 305. We got above it, closed back below it. So that failed from that standpoint. But again, with the move pretty much straight up, not really a surprise from this low here on the 14th. 6 days up, normal pullback as far as how much we've retraced on the NASDAQ 100. Same situation here with the closes. We've got 4 closes above the 50-day moving average. The 21 crossed up through the 50 today. And that's always considered bullish. We're starting to flatten out, barely turn up on the NASDAQ 100 also. Let's go to the Dow. This should look similar to the S&P, and it does. Big move up from 30,000 above 32,000 before the pullback. Today, 4 closes above the 50-day moving average, flattening out the 50-day moving average line. Mid caps here, 3 closes above. Again, big move up, normal pullback. Put in context, you can see the 21 clearly curling up here, headed toward the 50 next week. And IWM small caps, same situation, strong move up, sideways. But let's take a look at IWO growth, which was leading value except for today. You can see how we underperformed here, down 1.94% versus 1.26 on IWN. Note how value was lagging over the prior 4 weeks here before picking up some steam this week, closing right on the 50-day moving average is the value portion of the small cap index. So let's get to the tail of the tape here. See what's standing out here. Not a lot has changed here. Same headwinds. Put call a little bit higher today as we pulled back, but surprisingly, the VIX actually down today despite the pullback. That's a little strange. Fear and greed around a 39. Bear case still hanging on by a thread here. We'd have to break down early next week or on the Fed or with GDP for this to fully go away. For right now, as you know, we've been adding exposure, although we did cut something today, and I'll talk about that in a minute. Notes coming into today, beware straight up from the bottom check mark in the indexes, and really what I'm getting at here is this move right here, straight down, straight up. It's V-shaped. It's a check mark, which means we went above the prior high on the left side, really just kind of stretched and due for a pullback, and that's what we got today. So not really a surprise. A little bit of news today: Russia and Ukraine signed a deal to resume grain exports, and the TNX 10-year bond yield a 2-month low all the way down. You can see here testing the late May low. So we had a strong move up, pullback, tried to recover. So we're making now, if lower lows and lower highs, the 50s rolled over, the 21s rolled over. This puts interest rates at a short and a medium term downtrend with this big gap down today. That's normally good for stocks, but for the first time in a while, we're looking at some possible addition of some bonds to our portfolios. Let's take a look at BND here. This is a broad bond index. You can see long consolidation here going back to the beginning of May, false breakdown, recovered, and now The tight 21 and the 50 here, gap up off of it, coming into the declining 100-day moving average. That's the purple line on the charts today. So coming in today, we're watching for a broad range here. Support down at 39.19. That representing the 50-day moving average on the S&P 500. Resistance up at 40.17. That's that gap fill. The whole range was contained between there today. On the Qs, a little bit of a tighter range. We closed below support, so we'll recalibrate that next week and see what the next support level down is. Strong today. I already mentioned bonds. ITB continues to show relative strength, and this is really something that not a lot of people would be thinking could be strong with interest rates. Well, they were rising, but now recently they started falling again. Although the price of getting into a home well off the prior lows earlier this year. And then defensive sectors, XLPURE, that's staples, utilities, and real estate. Those led today very clear on defense. And I also mentioned across all market caps, small cap, medium cap, and large cap, value by far outperformed growth today. Weak biotech. Biotech has been everybody's darling for a while. Kind of a harsh move down today, down 4%, right into the 21-day moving average, which gives us, and a big support level here, which gives us a very nice low risk entry for a bounce up off the 21 next week. Glad I didn't plunge into that. I was considering buying this breakout on Wednesday, but seeing how extended we were after moving straight up, I just sat on my hands and might get lucky here and get a much better price off the 21. So biotech weak today. KBE, those are banks. We're really not weak relative compared to what the indexes do. They were early, but SOX, XOXX, another one that had been leading, harsh pullback today, but again, put it into context. It's a normal pullback. IGV, again, if you just look at the last 6-7 days, it's a normal pullback. SKYY, cloud stocks really hit hard today, down 3.6%. Again, in context, probably has retraced about a third of the move and just coming down to the 50 and the 21 here. Let's see, China wheat I mentioned because of that. Now this is something to look at. All you hear is that, oh, we're going to have grain shortages, food shortages. Oh my God, the sky's falling. Look what wheat has done, down 50% since the beginning of May, from 12 to below 8. This is the kind of thing where if you have a thesis that's not supported by price action, this is the kind of thing that can really hit you hard. So in the portfolios today, all we did is sell CLR, took a 3% loss on it, so less than a 0. It was a 2.5% position. We never pyramided because we never got the proper gain to add more to it. So this was a nice setup off a flat 50 and 21. It was up 2 days, but then the last 2 days with some weakness in oil, came off close below the 21 and the 50. We took our 3% loss on a 2.5% position, so less than 0.1% impact to the overall portfolio. That's the only change. We're still holding Tesla, which we got into yesterday. Tried to run away a little bit, reversed near this 100-day moving average, so we're still positive on that. And Celsius, noticed, we discussed this in our pre-market call, we were 16% above the 21-day moving average. We were looking to get squeeze a couple more percent out of it. If it got up to the +3 ATR, we were going to take the position off. We got up a little bit in the morning, but then it reversed hard with the indexes. Still 8.5% above the 21. Volatile stock, it has a 6.4% ATR. We're cognizant of that. So all it did was pull back to this breakout level over here from 7.7, so no damage to that chart. So we're still holding that, and then our 25% position in SSO. One of the reasons why I just love SSO is days like this where all growth is getting hammered. You saw down 2.5% on the G6, 2.38% actually. Multiple growth stocks down 4, 5, 6, 7, 8%. SSO, all that rotation takes place within the S&P 500 and the sectors. So SSO only down 1.8% today, S&P down 0.9%. Again, that rotation from value into growth and within the various sectors, all handled within the S&P. That's why we like to take a big core position in the SSO. We get 2 times the return of the S&P, and we get that reduced volatility in the portfolio. If I'd been loaded today, this is very much something that we learned from after some great returns in 2020, and then in February, March of 2021, we took a big pullback because we were still loaded in those growth stocks. We went back, did a study. If we'd have had the ballast of the SSO and cut back on the growth stocks, it would have drastically reduced the drawdown, would have reduced the gain somewhat in 2020, but what it would have cost us on the drawdown was would have been significantly less, and the risk reward improves by taking that approach. So bottom line today, normal pullback after a strong move up, leaders hit hard. Here are the key levels for next week, both from a support and a resistance level. Today, 722, we went above and reversed this 4,000 level, so a false breakout above there, pulled back. A little bit of strength late in the day saved us from coming down near this 50-day moving average. So all in all, really good week for the indexes, good week for leading stocks, good week for Revere. So let's get to the 21 over 21 list now. This video is going longer than I wanted it to. So the 5 that we booted out this week: Merck, MRK. What led for the longest time? Medical stocks. Medical stocks, this big move up, they're undoing it now, and a lot of this money is rotating into growth. So that's just what's going on. But again, all this rotation happens within the S&P 500, and that's one more reason to have that big SSO position the way we do. So Merck got punted off the list. Another medical stock, UTHR, getting punted off the list because they lost a patent dispute this week, and the market did not react positively to it. Another medical stock, Vertex, still keeping a close eye on this one. It's a close below the 21, but volume has been really light on this pullback. Going to keep our alerts for Vertex to see if it gets back above. Really one of the better fundamental and technical pictures when you take all things considered. T-Mobile below the 21. Now T-Mobile got hit hard Thursday and Friday with terrible numbers from AT&T and Verizon, but see, we're keeping our alert here above the 21 for this. This has really been acting so much better than AT&T and Verizon. They've got fantastic numbers. Look at this 150% earnings for 2023. They spent a lot of money in 2022 expanding 5G. PE at 28, it's more expensive than those two, but the growth rate is there. Note the strong relative strength all year really in this stock until recently. Is it unduly being punished because of AT&T and Verizon? We'll see, but T-Mobile coming off the list, but staying on our universe list. And finally, AutoZone. I just never liked having a $2,150 stock on here. We couldn't buy it for quite a few of our clients if we did want to buy it. So split your stock, AutoZone. Closing below the 21. Glad to see it go bye-bye. So the first 5 here are going to be the new replacements. We're going to start off with DHI. DR Horton had a really nice shakeout and a day 2 higher high after their earnings report. 53% earnings growth, 21% sales growth. Going to decline next year, but a PE of only 5. Good reaction to earnings. It's already had this big sell-off. Relative strength recently, as we've discussed, over the last 5-6 weeks. Let's see what happens when it comes into the declining 200-day moving average, but relative strength in the ITB, XHB, ETFs, and the sectors lately. Next up, Fortinet. Fortinet and PanW all both coming back decently. There's got to be it's obvious that companies have to spend money in cybersecurity. So which one is going to form the base and be the new leader? That's what we're trying to determine right now. Failed on this move above the 200-day moving average for the second time in 2 weeks. EPS in 12 days, putting it on the list, keeping a close eye on it. Apple, serious relative strength on this over the last 8 weeks, maybe foreshadowing this move off of the bottom. Relative strength new high today on a weekly chart. Reversed at the 100-day moving average. Right above here is the 200-day moving average. So let's see what happens should we get there next week. Silvergate, adding this after talked about it in the video this week. Look at these big volume bars on Silvergate after their earnings move. That's institutions going back into this despite cryptocurrency really getting hammered. Continued great growth numbers on Silvergate. I guess they get paid either way. Reversed at this 100 level in the 100-day moving average. That's the pink line on here, but love to see a normal pullback into the rising 21 as something to possibly take a shot at. Tesla, talked about how we took a position in this yesterday, 2 buys above the 100. Big relative strength the last 2 days on this. Great growth numbers continue. It's the type of stock that can lead a market rally. So back to the remaining Sweet 16 from the prior week. We're going to go through these quickly. Roblox continues to hold the 21, of course. BMBL trying to break out, not today, reversed along with most of the rest of the market. LNTH pretty volatile, failed breakout on Wednesday, 2-day pullback. Dutch Brothers considered buying this. This is really getting on the cusp of not being liquid enough for us, but it's sitting on the 21. Volume has really lightened up recently on this. Great fundamental story, though. Qualcomm, really nice move off the bottom, leading the semiconductors right here at the 200-day moving average with earnings next week. Ollie, the bargain store, all the dollar stores for the most part pulled back, all for the most part. That's an oxymoron. They did pull back this week, though, but we bounced off the 21 here. Celsius, we own it. We already talked about this. Failed breakout from yesterday, outside negative reversal, but the chart still looks fine. Monster Beverage, sister stock to this, sitting right on the 21. Lack of relative strength this week on Monster. CNC, earnings next week. This medical managed care group, there's 4 or 5 stocks in here. Any of them could be in here, but acting well, CNC, UNH is another one. BJ's failed breakout today. We got the alert above the 71 pivot up to 71.24, but it reversed along with the market. Still closed positive, and look at the blue bars compared to the red bars over the last 3 weeks since this pullback here. Money flowing into BJ's very clearly. Costco, also have our eye on that one as that's gotten back above the 200-day moving average. GTLB, Computer Tech Services Company, nice tight action above the 21. Quanta Services, unfairly treated badly on 715 along with the solar stocks. Recovered the 21, closed near the highs for the week, but reversed at the end of the reversed today, along with most all stocks. Chewy showing the same thing, ran into this 200-day today and reversed, negative outside reversal, but great relative strength recently. SWAV failed breakout, broke out early with volume, reversed with the market. American Tower recovered back above the 21, really tight action here. Lack of relative strength, though, until late in the week as it got back above all its moving averages. And finally, Eli Lilly, this really not giving up any price, it's not giving up the price action. It has given up a little bit of relative strength over the last week, along with most of the medical stocks, but holding in this nice tight range, earnings in 2 weeks. And that's your 21 over 21 list, and we're 30 minutes into this video, so I need to wrap it up. As always, love to hear from you. Email don@revereasset.com, phone 855 Real Wealth. Wrapping up the week ending July 22nd. This is Don Vandenbord with Just the Facts. Telling it like it is. Remember, it's not how much you make in the market, it's how much you keep, and that's why we're trend followers. Thanks for listening and have a great weekend.